Your syllabus. Syllabus is very important. Syllabus is like your roadmap. Where is that you are going? Okay, so please don't forget roadmap where you're going. You should have the map. So we are now finished almost, except BRS, almost 2 units we completed. Now we are in third unit. Okay, so third unit is analyzing and interpreting financial statements, part one. So part one is now. So any guess when is part two? Like who is, we have no part one, part two. So when is part two of this part? Any guesses? Yeah, students, please talk. When are you going to learn part two? All are there or not? I don't know. I think nobody is there in front of the system. You are just logged in and went off somewhere. Ariyaran? Ariyaran, gently. Richu, please talk.
Sir, we are here.
We are here, sir.
Anand? No, unit 2. Okay. So financial statements are very, very important. They represent the formal record of financial activities of the entity. You all know that. And by looking at that, we can find out the financial strength, financial performance, and liquidity of the company. Since now we already know what is financial statements, you know how to prepare also financial statements. Now tell me, by looking at which statement, I can find out the company's financial strength. Please tell me, by looking at which statement or which account, I can find out financial strength.
Beyond the
Profit and loss.
Profit and loss account is wrong.
balance sheet.
Balance sheet.
Balance sheet.
Yeah, balance sheet will tell me my financial strength. What are my assets and what are my liabilities? That shows my financial strength. And performance, from where I can find out performance, whether my company failed or passed.
Beyond the
Profit and loss
Profit and loss account.
Yeah, it is profit and loss account or income statement. Okay. How will I say it is performance is good by looking at profit and loss account?
When profit is more.
Will you repeat again?
When the profit is more.
By looking at the profit. If you're getting a profit, you are passed. If you get a loss, then you are failed. Yes or no? Similarly, for a student, how will you come to know you have performed well or not in your studies? By looking at your mark sheet. Yes or no? By looking at your mark sheet, I can say whether you have passed or failed, you have performed well or not, whether you got 50%, 50% distinction, or you got rank. Similarly, if you want to know the performance of the company, you have to look at the income statement or profit and loss account. And liquidity, how can I find liquidity statement? Cash flow, okay. Cash flow I can teach you. So I'm asking only from what I taught you already. Cash flow doesn't show liquidity. It only show how the cash is moving. Any idea? How, if I want to find out the liquidity of the company, where I have to check? Which statement should I check? Or which account should I check? What do you mean by liquidity? Can someone tell me? What do you mean by liquidity?
Cash in hand.
Okay.
Sir, if cash is available easily in the market, it is known as liquidity.
Cash is available in the market. Moses?
Yes, sir.
Repeat again.
If cash is easily available, if
For
the
whom?
rapport
For whom?
The liquidity is the ability of a
Sir.
company to pay off all its liabilities at any moment.
Yeah, the liquidity shows that how much they have the liquid cash and cash equivalent. When I say cash and cash equivalent, the equivalent like you are saying money market instruments, okay, your debtors, all those are called as liquid assets. In other way, they are called as current assets. So when you look at the current assets, I can find out, okay, how much liquid is my company. That means how fast can I convert my the current assets into liquid cash. That is called as liquidity. Okay. So within 1 year, if you can convert into cash, that is called as liquid asset, which I cannot convert into more cash within 1 year or less than 1 year. They are called as illiquid assets, like your fixed assets, like your long-term investments. Okay, that cannot be liquidated. Understood? So any asset which you can convert into cash in a very less time without undergoing any loss, that is called as liquidity. So now tell me where you can find that.
Sir, balance sheet.
Yeah, balance sheet, specifically when you look at the current assets. Understood?
Yes, sir.
Yeah, any doubts, please stop me, okay? And I'll explain to you. Please stop me, any doubts are there. Okay, shall I continue?
Yes, sir.
Yes, sir.
Okay, so these are very, very important. As an MBA student, for you not like your preparation, journal entry, trial balance, I'm not saying it's not important, but the main important for you to focus is this one. This chapter is very, very important for managers. This is what you will be doing when you become a manager. You will not sit and prepare journal entries. For that, you will have an accountant. You're not training, we are not training you to become an accountant. That accountant you will do, okay? But your job is analyzing and interpreting. That is why you should understand very clearly which statement gives you what. Okay? So every financial statement reflects the financial effects of business transaction and events on the entity. So this chapter is very important for you because this is what you'll be using when you start working in a financial field. Okay? So already I think you know this types of financial statements. That is your financial position, that is balance sheet, income statement. In other words, we call it as P&L account, cash flow statement, and supplementary notes. Okay, and you already know all this. I think I will not be doing it. I will be skipping it. Okay, you already know what is balance sheet, how it is prepared. Okay, and you know what is income statement. It is also called as net profit, which is prepared by income and expenses, and you arrive at the net loss and net profit. And cash flow statement, you don't know. Let me explain. So cash flow statement, you'll be learning next semester how to prepare this. Okay. Next trimester, I'll teach you how to prepare cash flow statement. The simple way, it will show you the movement of cash in the company. Okay, movement of cash and the bank balance over a period of time in the company, the cash inflows and cash outflows. When I say cash inflows, when the cash is coming in. For example, when you are selling your products in the market, not only when cash is coming in or cash is going out. Is it cash inflow or outflow? From the sales. When I'm selling a product in the market, will it be cash inflow or cash outflow?
Cash inflow.
Yeah, because cash is coming in. When you're selling a product, what comes in? Cash comes in. So, and cash outflow, for example, I am paying interest to the debenture holders. Okay, so where cash is going out, or I'm paying salary to my employees. So that is cash outflow. Okay, so this statement will record cash inflows and cash outflow from the three activities. Normally we divide into three activities. One is called operating activity, second one investing activity, and financing activity. So you will learn about this in the next semester, not to worry. So we will calculate the cash inflow and outflow from operating activity, like your sales, cash received from debtors, royalty, mainly from your primary activity business. And second one, investing activity, whether they're investing in they're buying any assets or they are investing any financial investments or they're buying any factory plant or they're selling any assets. That is investing activity. Then financing activity, when they are raising the fund, when the company issues equity shares, not only whether it is a cash inflow or cash outflow, when company is raising fund by issuing equity shares, is it cash inflow or outflow?
So it's inflow.
Why?
So because when they're raising shares, like people are investing, so they're getting money. So
Yeah, when I'm issuing my share, my company share to the investor, what I get cash. Okay, I will be getting cash from them. Okay, so that is investing, financing activity. And when I'm raising fund, I need to pay them dividends. I need to pay the interest if I'm raising debt capital. Okay, that is when you put together all this, I will calculate the net cash inflow or outflow from the all the three activities. Okay, then I will come to know whether there is a cash increase or decrease in the company. Okay, so just keep it in mind all these things. So now we come to main part. What do you mean by analysis? Can someone tell me what is meant by analysis? It's a very common word. We normally use it. You also maybe used it many times. Can someone tell me what do you mean by analysis? Quickly.
Observing or making a point.
Observing. Okay.
Interpreting the data, sir, whatever the financial data we have.
Okay. Interpreting the data. What do you mean by interpretation? I'll ask you one more question.
Same thing that you asked at first, like if you look at the balance sheet, what does it show? Like we look at the balance sheet and try to interpret, okay, the company's position is like this and all, like that.
Your audio is not clear. Who is answering?
Is it audible now, sir?
Yeah, Melvin. Yeah, tell me.
Yeah, I was saying, as you asked at first, like what does balance sheet show the strength of the company, and also the same thing. You look at the data and you see what it's showing, and you interpret it.
Yeah. Okay. So you try to interpret by looking at the data, looking at the balance sheet. Okay. So this is very, very important for MBA students. Okay. So what is analysis? It's a detailed examination. Detailed examination of the elements or structure of something. Okay. It's a general meaning I brought that. Okay. So you're going to examine the elements in the income statement, the elements in the balance sheet. Like you look at the current assets, fixed assets, fixed liability, fixed assets. You look at the sales, you look at the expenses, operating expenses, non-operating expenses. Okay, that is direct expenses, indirect expenses. You look at the profit. So these are the elements what you normally find in the financial statement. Okay, one more meaning is a systematic examination, evaluation of data or information by breaking it into its components, parts to uncover their interrelationship. So what we do, sometimes we will break it, okay, and we will analyze separately. We will have different ratios. We will only take current assets and then we'll calculate some ratios. We will take only fixed assets and we'll calculate some ratios. So we will break it into parts and then we try to uncover the interrelationship between these variables what we are finding. Okay, this already you know what is the trading and profit and loss account, balance sheet. Okay, so now we will focus on the specific for our course. What do you mean by analysis of financial statement? Can someone read the definition? Can someone unmute and read?
Financial statement analysis is largely a study of the relationship among the various financial factors in a business as disclosed by a single set of statements and a study of the trends of these factors as shown in series of statements. John and Mayer.
Thank you, Rima. So it is largely a study of relationship. So what we take, I said, no, there are different financial factors in a business, like for example, sales, profits, expenses, okay, income, and then we have assets, we have liabilities. These are the various financial factors. So these are the financial factors. We will try to find out what is the relationship between these factors. For example, sales and advertising expenses. These are two variables. Sales and advertising expenses. Do you think there is a relationship between these two? Yes or no? Is there a relationship between sales and advertisement? If something I spend more money on advertisement, will it affect my sales? Will sales increase or decrease?
Increase the
Normally, yeah. When I spend more advertisement, I give more ads in television, in radio, in print media. So what happens? I'm spending money for advertisement. It's an expense. But for the result of that will be what? My sales will increase. So there's a relationship between advertisement and sales. Did you get it now? So we are finding out the relationship between these factors, okay, disclosed by a single set of statements. And we study the trend. We study whether the sales is increasing or decreasing. Sometimes companies may spend more expense in advertisement, but still sales may not increase. Sometimes it will happen. So you're going to find out the trend, whether trend is increasing or decreasing, or they need to stop spending more on advertisement and improve the quality of the product, or they have to do research and development and use new product. Maybe this product has become outdated. So many things you can find out by looking at the analysis. Okay. So these shows the various factors shown in series of statements. Okay. Is it clear? Any doubt? Any doubt, students?
no, sir.
Yeah. So it analysis will lead to what? After you analyze, maybe I'm doing a comparative statement I prepare, or common sense statement, or I prepare some ratios. After preparing that, the main important part is interpreting. So what is interpretation? Interpretation is nothing but determining the meaning of the calculation what you have done. You got some percentage. For example, you got 1:1. When I did some ratio, I got 1:1. So what is the meaning of that 1:1? Okay, so there is a meaning for the number. So you calculate some percentage. So you got 20%. When sales to advertisement expenses, you are going to calculate, you want to know 20%. That means what? So every 1 rupee I'm spending on the advertisement, it affects 20% of my sales. That's the meaning of that. Okay, so you want to find out the right time meaning. Okay, or you draw the inferences, or you do the conclusion with regard to the results of significant relationship between the items correlated. Okay, it can be net profit and sales, or it can be okay advertisement expenses and sales. It can be my operating expenses and the operating profit, non-operating expenses and net profit, or it can be my what do you call my current assets into the capital, or my fixed assets into my capital. Okay, so we find out different relationships. But one very important thing is, when I'm finding some relationship, it should have some meaning. When there is no meaning, I cannot actually determine any relationship. Okay, so when I'm taking any two variables, when I want to find out the correlation, so these two variables should have relationship. I think it may be sounding like statistics class. I don't know. Okay, all of you, I think you learned all this right in statistics correlation. Are you learning in statistics correlation? Yes, sir.
We learned.
Yes, sir. Yes, sir.
Yes, sir.
Yeah. So since you already know that, so it's I think my job is little less. So you're going to find out the correlation. Okay. So analyzed information is used by management, bankers, creditors, investors, okay, and others to form the judgment. Okay. judgment about the performance of the company, whether the performance is good or bad, whether the trend is upward trend or downward trend, and financial position of the company, whether financially company is strong or it is weak, or it is about to die or about to become insolvent. Okay, so you will get all the signals when you look at the interpretation, look at the analysis. This is mainly useful for the decision maker, like your creditor. For example, you approach the bank for bank loan. So what the bank people do? They will look at their analyze your statements. Okay, they will analyze the calculate the ratios. They'll see your cash flow statement. They'll see your comparative statements, common sense statements, and then they'll read your interpretation what you've given, and then they will do the judgment whether to give loan or not. Okay, understood? That's the main use. Or even the investor, before they invest the money in your company, the investor before buying your equity share or before they invest in your debenture of your company. So what they'll do, they will look at your statements and they'll analyze and they interpret, and then they'll decide whether to invest or not in your company. Are you getting it, student? Understood? Hope it is clear.
Yes, sir.
Or I'll explain again. No problem. Is it clear or should I explain again? Yeah? Yes or no?
Yes, sir.
You want me to explain again? Yeah? Yeah, Sudhakar, what is not clear for you? Which one you want me to explain again? Sudhakar?
No, sir, it's clear, sir.
Sudhakar has put in the chat room. He is asking me to explain once more. Sudhakar, please message in the chat room. What is it you want me to explain again? Sudhakar? I think he's not there. Okay, let him put in the chat box. Okay, so there are different types of financial statement analysis. One is called internal, external. When the analysis is done by the internal people, that is called internal analysis. When it is done by the external people, like creditors, bankers, and investors or government, when they do, it becomes external analysis. Second one, horizontal. When you do, okay, horizontally, you do horizontally for you take more than 1 year. For example, you take 5 years balance sheet and you analyze, or you take 5 years income statement and you analyze. That is called horizontal analysis. We do horizontally, we analyze. So we have different methods in that. One is called comparative statement and one more is trend percentage. Okay, we use horizontal analysis. And third one, vertical analysis, where we do only for 1 year. We don't take more than 1 year. We take only for 1 year, and then we will calculate the common size statements or we prepare ratio. We prepare only for 1 year, and we prepare even common size for only 1 year. We do only the horizontally. We don't do what? Okay, we don't do horizontal. We do vertical analysis. Okay, that is what is that. Anyway, we will discuss one by one what is horizontal, what is your vertical. Okay, and before we discuss that, why we need to do that? What is the significance and purpose of financial statement analysis? That's the question you may be coming in your mind, right? Why we should do this? Okay, the main thing is for judging the efficiency. What is the efficiency? How do you know whether company is efficient or not? Yeah, students, kindly interact. Yeah.
If it
You
will
know-
be in profit,
Yeah. Somebody is answering. The answer is already there. on
The
slide.
annual income, sir.
Looking
The
at
profits.
Okay. Looking at the annual income. If income is good, you say company is efficient. If not, you say company is not efficient. Okay. Looking at the profitability and earning capacity. How much earning capacity they have. That means how much sales they can how much they can sell in the market, their products, whatever the product services, whatever they are earning or selling. Okay. Second one, judging liquidity. Okay, and this is very, very important to know whether I am the company is capable to fulfill my short-term liabilities. Can I pay the wages to my workers? Whether can I pay my salary? Can I pay salary to my employees who are working every month? Okay, whether I can pay the electricity bill, which comes every month, and within 15 days you have to pay the electricity bill. Okay, so that is what is liquidity position. And third one, solvency. Whether I'm able to meet my long-term debt. If I'm not able to meet my long-term debt, then I'm about to become insolvent. What is by insolvent? What is by insolvent? Insolvency is that when your liabilities are more than your assets. Are you understanding? Insolvency is that situation or a position when your liabilities are more than your assets. That means you are supposed to pay more money to outsiders, but you have less money to repay. Then you become insolvent. So you will come to know when you are doing analyzing and interpreting the data. The next one, judging the efficiency of management. Whether the management is doing well or not, whether the manager or the CEO of the company is performing his duty well or not, you can easily find out by doing and interpreting and analyzing your data. Okay. By analyzing the financial statements, I can come to know whether the management is good or not. If the management is not good, you can easily find out by profitability, by how they use the resources of the company effectively and efficiently without wasting time, without spending more money. Okay, they are able to do the same job at less cost. That talks about the efficiency of the management. If they are not able to do well, so what the company will do? They have to change the management. Understood? Am I making sense? Are you able to understand? Student? Do you understand?
Yes, sir.
Yeah. And interform comparison. You can even do the comparison between your company and other company. You can compare with your company with your competitor company. And you can find out where we stand. Whether we are better than my competitors or we are not better than the competitors. Then you can start putting more efforts and becoming more effective and more efficient. So you can do the interform comparison. And it also helps you to do forecasting and budgeting. You can even forecast for the future. Okay, my company is earning this much of profit. That means my efficiency is very good. Then what you can do is you can think about expanding your business or developing a new product and launching a new product in the market, or even you can diversify your business. Okay, and you can do even budgeting. You can prepare budgets. Okay, for the future. Always budgets are prepared for the future, not for this year, for the future year. Okay. So in India we have budget. So when the finance minister presents a budget for the country, any idea? Who is the finance minister of the India?
Nirmala Sitaram.
Yeah, when she will present the budget this year? Which month? Yeah, student, please tell. Already the news is there in the news. Already people are talking about that. It is there in all the media. Yeah, that is next month only. She is going to present the budget in the next month. Next month she will present the budget. Okay. Even we will try to have telecast or we'll have some panel discussion on that. Okay. You can know about the budget of India. So even the India budget is also prepared by doing the analyzing the data of the Indian economy, and then they prepare the budget, and then they allocate the so and so fund for various activities of the company, of the India, of the country. Okay, any country is ready. So the principal tools of analyzing is comparative financial statements, common sense financial statements, trend percentages, and financial ratios analysis. Okay. So we will do the first three. This trimester, we will do first three. What are those? We will prepare. I'll teach you how to prepare comparative financial statement and common sense financial statements and trend percentages. And financial ratios, cash flow statements and fund flow statement, we will learn next trimester. Is it clear, student?
Yes, sir.
Yeah.
Yes, sir.
We will briefly go through all the methods quickly, so that next class when I take, we will directly start the problems. Okay. And whatever I am teaching, already it is there in LMS. Please read. Any doubt you get, you can ask me next class. Okay. And then we will directly go for the numericals. And question bank is also there. I think it is there already. If it is not there, please let me know. I will put it again. Okay. And you will be having your continuous internal assessment assignment 1 from this chapter. Okay. I'll be allocating you. I'll be asking you to select any one of the company. Okay. From the BSE, that is Bombay Stock Exchange, you have to select, and then you have to analyze the particular company. And there is no overlapping. What is overlapping? Every student should take one company. No two students should take one single company. So for that, to avoid overlapping, what will I do is, I'll prepare a Google form and I'll circulate, and each student should give your company name. That company should be listed in Bombay Stock Exchange. So today only, please go to Bombay Stock Exchange and know the companies which are listed. Among those listed companies, you should select. And why I'm telling listed company? Because listed companies, you can easily find out, get their financial statements in their website. It will be already published in the financial statements are already published in the website. Because listed company is mandatory for them to put their financial statements in the website. Okay, or in any other, even in the other media also you can find out. You can even find in moneycontrol.com, valueresearch.com. You can even find there also. So the listed companies financial statements are easily available. That is why I am asking you to select the company from the BSE. Is it clear? Yes or no?
Yes, sir.
Yes, sir.
Yeah, and this assignment carries marks. This will be carrying 5 marks. Okay, don't worry. You will do only after I teach you. I'll ask you to first I'll teach you how to prepare, then you can do it. Okay. But anyway, start today only. Please go to website of BSE and please select the company which one you want to do. Okay. You can select 2 or 3 so that if somebody else is taking, so you can change it. So 2, 3 company, keep it in your mind. Okay. So what is comparative financial statement? As I said earlier, it is the horizontal analysis. We will analyze horizontally. We will take 2 or more years together and we will analyze. That means we will calculate the percentage. That means, for example, last year to this year, if I compare whether my sales increased or decreased. Okay. So what do you do for that? I will calculate the percentage. How will I calculate percentage? This is the formula I will be using. Current year minus previous year divided by previous year into 100. When I calculate, I will be calculating the percentage. And I will be calculating even absolute in rupees also, comparing the previous year minus current year. Whether it is increased or decreased, we will calculate, and then we will calculate percentage also for each and every element in your balance sheet as well as in your income statement also. Okay. So what we do, we will take each and every element. For example, equity capital. I will calculate previous year and current year whether equity capital increased or decreased. I will calculate absolute value and I will even calculate percentage. Okay. Simply remember this formula. We will be using it next class. And similarly, we will even calculate comparative income statement. I will take income statement, that is your profit and loss account, and then I will calculate whether sales increase or decrease, whether wages increase, decrease. For each and every item, we will calculate. Okay. And next one is common sense financial statement. I will do only for 1 year. I will not do more than 1 year. But here I will be doing for vertically. I will take total. You can see here, second point, it is visible. I will take total assets and then I will calculate the relationship between the assets with other things. So I'll express, I'll take total asset as 100% and different assets are expressed as percentage of the total. Similarly, I'll take total liability as 100% and then I will calculate the other liabilities in the balance sheet in relation to that what is the percentage. Similarly, income statement, I'll take total assets, total sales. Income statement, I'll take total sales as 100% and in relation to total sales, I'll calculate the remaining items in the income statement, their percentage. Okay, that is what I'll be doing for the income statement, common side. And net percentages, I'll calculate the again percentage only. I'll be doing percentage, and here I will not be writing the absolute value. I'll write only the percentage. Okay, here I will calculate only percentage. That's why it's also called as percentage analysis or trend ratio. I'll only calculate the percentages and then I'll see whether it is increasing or decreasing. And sometimes we even use we'll put the graph also. We use chart or graph to putting your percentages and we will interpret that. And remember, we have to put interpretation for all the methods, whatever you are using. Whether you use comparative or common size or trend ratios, I'll be using, I have to write the interpretation about the important points when you're looking there. Okay. Anyways, I'll teach you. And net percentage, what is the advantage? It is very, very important. It gives, it can be immense use in making a comparative analysis over a number of years. And it is easy to identify changes, whether percentage increase or decrease. When I look into that, easily I can identify whether my company is going in the right direction or in the wrong direction. And then I can interpret the same because percentage figures disclose more than the absolute figure. If I just say my sales increased by 1,000 rupees or 2,000 rupees, if I say it looks good, but when I calculate percentage, last year to this year, what the percentage? Percentage may be only 10%. When the percentage increase only 10% by sale, it's not a good thing. Is that no? If you will say more than 50%, okay, it's very good. My sales increased by say, if I say 80%, it's a good number. But when you look at the absolute value, you will not get it. But when you look at the percentage, the information will be very crystal clear. You can easily find out what is the company really growing, whether it's growing at what percentage. That is why you see when the managers are meeting in the board of directors meeting, they will ask percentage. They will talk only numbers. Okay, they will not ask you how your company is doing. You will say okay, it's good, but they will not be satisfied with that. You should clearly show your analysis at what percentage your company is doing. What is your liability? What is your asset in percentage you have to present? Okay, that is why, as I said, this particular chapter is very, very important. Okay, are you getting it? I'll just show you some of the illustration. Is it visible, student? Are you able to see? This is there actually in the LMS. You can also download it and you can view it later. Okay, so this is one example for horizontal analysis. So what you can see here, this is income statement. I'll give actual introduction to income statement because we are not used this format. We are used only P&L format. I'll teach you how to do that. See income statement. See here, you can see here how many years they used here. They taken data for 1, 2, 3, 4, and 5. Okay, and then down you can see they have calculated the percentage. Whether it is, say they calculate gross profit. So gross profit, where is gross profit here? So this gross profit, whether it is increase or decrease. You can only see, look at, for example, if you look at only the number, absolute value, say 1 lakh, 11 lakh, 40,000, 249, then 15 lakh, 57, 850. I will not actually find out exactly what is happening. But if I look at the percentage down, I can easily find out, okay, in the year 1 it is 52%, and year 2 it is 54.6%. So then you can see here, third year and fourth year, fifth year. But if you look at the figure, you can find out that gradually gross profit of the company, is it increasing or decreasing?
Decreasing.
It is decreasing. But if you look at the number, I may not exactly find out. But if you look at the number, it is very crystal clear compared to the last year, whether I am growing or degrowing. Okay, so that is how they calculate. I'll show you how to calculate this in absolute value as well as in percentage. This is how you do. We will write one side by side, first year, second year, third year, and then we will calculate absolute values and we will calculate percentage. This is how we calculate the it's called comparative income statement. Okay, and then this is the format of income statement which we will be using for analyzing the income statement. Income statement very clear, students, please understand. It's nothing but your P&L account only. Only thing, the format is different. Okay, whatever you learn is correct. Only thing, the format is different. Okay, that was okay what we are doing. So here we can see that first we will write income statement, the sales. From that we will calculate, we will deduct the cost of goods sold. I'll teach you how to prepare, how to calculate cost of goods sold, and then we will get gross profit. What is cost of goods sold? Nothing but your direct expenses and minus your closing stock. Okay, direct expenses like your purchases, okay, and the wages, all direct expenses minus closing stock. Okay, you will calculate that. I'll teach you how to do that. And then if you minus, you get what? Gross profit. And then the first you will minus the operating expenses. We have time, no? Yeah. Please tell me, okay, time is getting over. I'm recording also the session. I'll put it in RMS. You can again look into this because sometimes you may forget it. So operating expenses are nothing but your direct expenses and indirect expenses which are directly, indirectly affecting your companies and your company profit. Okay. So these are called operating expenses. The expenses incurred to run your business. First is your selling and distribution expenses. You can see there different expenses examples are given there, like say salaries, commission, salary for sales officer, travel and entertainment, advertising expenses, freight, shipping, and all that. And then we have administration and general expenses like officer salary, legal and professional services, utilities, insurance, depreciation, all that thing. And then when I calculate gross profit and minus all this, and the minus operating expenses, that is your selling and distribution expenses and general expenses, what I get? I will get operating profit. Okay, and then we have to add non-operating income. What is the non-operating income? Whatever you are writing on the P&L account credit side. What do you write on the credit side of P&L account? What you used to write? Student?
Incomes.
What income? Do you write sales in P&L account?
Indirect incomes.
These are called indirect income. Yeah. That's it called non-operating income. This income you are getting not because of your main business, not because of your main operations of the company. This is because you had some extra money you invested and you got dividend, and you have extra place and you given the premises for rent. Then you got rental revenue. Then you got some gains on selling your assets. You had some old machinery, you sold it in the market, and you got some sales. You got some revenue. That's a gain on sale of plant. And income you received from your investment, etc. So all these are called non-operating income. And non-operating income we need to add. Okay, and then you have to deduct non-operating expenses like your interest paid on bonds and promissory note, interest paid on bank loan, loss on sale of land. All those things are called as non-operating expenses. When I do that, what I get net profit before tax. Is it clear? You will get net profit before tax, and then I have to minus tax. From that, I'll get net profit after tax. Okay, is it clear? This is your income statement. This is what we'll be using. You will not be using the P&L account format. We'll be using this particular format, And balance sheet will use the same format. Don't worry. Balance sheet will be using the same format, only thing in the vertical format. Same thing will be in vertical format. Okay. So is it clear? I'll repeat again. Sales minus cost of goods sold. I'll get gross profit. 1 minute. I'll get gross profit, and then I'll minus operating expenses. I'll get operating profit. Then I'll add non-operating income. Then I'll deduct non-operating expenses. Then what I'll get net profit before tax. And then from this I'll deduct income tax, and then I'll get net profit after tax. Is it clear? Any doubt? Because this is what the format I'll be using, okay, for third unit. It's nothing but your P&L account only. Only thing we are putting a different format. We are putting the vertical format. Is it clear? See, when you download even your income statement of various companies from BSC listed companies, they will be using the same format. It will be the same format. Okay, that is why we'll be using this format. It's okay? Yes or no? Please reply, student.
Yes, sir.
Understood? Yeah.
Yes.
And then vertical analysis, let me show you how do we normally do vertical analysis. Anyways, I'll teach you for all this. We'll take an example and we'll do it on the board. So this is income statement. You can see there income statement only, but you have taken only 1 year. We don't take more than 1 year. Okay, and then we will calculate the percentage. When you are calculating the percentage here, I will take the net income, or sorry, the sales, the total revenue. I will take this as 100%. And then in relation to that, all the remaining things I will express in terms of net profit and the net revenue or total revenue. Okay, you can see there revenue, total revenue, cost of total revenue or minus that, the cost of revenue, but your cost of goods sold, then I'll get gross profit, then I'll minus the selling and distribution expenses, R&D expenses. Every company will have different expenses. Every company will not have the same expenses, so we will be having to come up with various things, and then I will be adding income, operating income, then minus the interest expense they have, and then income tax before, then it become income before tax, then I'll minus that, I'll be getting income after tax, and then any extraordinary items are there, they will add that. For example, there was a flood and they had a huge loss. Okay, these are called extraordinary items. Like if you had a tsunami, if the tsunami was there and you lose so much of assets are lost, that will become extraordinary items, will be minusing from that, and then we'll get a net income. Okay, and that net income will become your net profit. Okay, this is your vertical analysis. Okay, is it clear, students? This is what we'll be using when we come across when we are doing the problems on this particular thing. Okay, is it clear? Now, any doubts? Now we'll discuss any doubts you have. Anything you want to know? You all know how to access the company's financial statements. See, you can go to any company. Okay, for example, you go to Infosys. Okay, I'm showing you how to download the financial statement so that you can use it for your assignment. Okay, here you go to investor. See, already announced the third quarter results is already there. You can read that. Okay, go down. You can read their company financials. Okay, you can see their results. See here, you can see. Can you see here annual reports? Are you able to see, student?
Yes, sir.
Yes,
Yes,
sir.
sir.
Yeah. Go here and then you download. Okay. So the annual report is 313 pages. You don't worry, you don't need to use all the pages you want to use. Just go there, go down. You take the recent current year. That is your last financial year. What is the last financial year for us? What was the last financial year? You want to do for last financial year. Can someone tell me what is the last financial year?
2019-2020.
Yeah, 2019 April 1st to 31st March 2020. That is the financial year. You have to download, okay, the financial statements of 2020, sorry, 19, 2020 and 18, 19 also, because you need to have 2 years. When you want to do a comparison, you need at least 2 years. So you should download 2 years, 18, 19 and 19, 20. Is it clear? So it will be there. Normally, when you look at any financial statement, annual report of any company, they'll be having 2 years. Actually, they'll be having 5 years data. Okay, you can take 2 years, 2 or 3 years you can take, and then you can read that. Okay, this is what you can see there. You will have this. All these things are there in the annual report to the company. Okay, you will be having related to shareholders, board of directors, leadership team, awards, all that will be there. Okay, and the board will also prepare the report. Okay, of the results of operating and affairs, human resource management, all that will be there. Okay, and then you'll be having corporate governance report also is a part of another report now. As per the corporate governance, they to do that. And then this is where you can see the consolidated financial statements. Are you able to see? Yes or no?
Yes, sir.
Can you see here the consolidated balance sheet, consolidated statement of profit and loss account, okay, changes in equity, cash flows, and the notes of consolidated cash flow. You can look into that next year. Next year, I will give you assignment on cash flow. This year, you can do profit and loss and equity. Sorry, profit and loss and balance sheet. Okay. So when you go to this page number 223, you can find that. Okay. So I guess you can 223. Can you see there? This is the changes in equity. Okay. 223. Sorry, last page. Previous page. Yeah, this is your consolidated profit and loss account. Are you able to see? This is what you download. This is for already has given 2 years. Okay, 19, 20. 19 means actually 18, 19, and 20 means 19, 20. Okay, that's the financial year. So he has given for 2 years. These 2 years you will download, and then you have to prepare comparative statement, performance statement, and trend ratio. Similarly, you can do even for balance sheet. Let me show you balance sheet of Infosys company. Yeah, I think balance sheet went first only. Yeah. Normally they put balance sheet first. Yeah. Can you see balance sheet now of Infosys company? Are you able to see?
Yes, sir.
Yeah. You can see the total assets of the Infosys company last year and this year. The total assets they had how much? So 38,192 crores. Okay, and the previous year it was 31,860 crores. Is it increase or decrease? Increase or decrease?
Increased.
Yeah. That's the non-current asset, that's the fixed asset. And then you can see total asset. Total current asset is this one. 52,000 was earlier, now it is 54,000 change. Again, increase or decrease?
Increase.
Current assets. Again, it is increase. Around 1,000 plus is increase. 1.2 increase. And total asset is, you can see there. Earlier they had 84,000 change crores. Now it is 92,000 crores. Again, there is an increase in the company. That means company is doing good. That means financially they are stable, financially they are strong, and they are growing. Okay, that is what you can find out. So this is what you download. Now I just showed you one company. What you do it, you have to download similarly for various companies. Okay, and what all we have done in the class, same thing will be there. Some items may be different items. Any doubts are there, you can let me know. But probably you will understand when you download that, you can understand. Okay. I think time is up. We'll stop it now. Understood, students? So this particular chapter is very, very important.